Stop looking at the spot price on your screen. Stop looking at the ticker tape running across the bottom of CNBC. It is a hallucination. It is a digital ghost story designed to keep you calm while the building burns down around you. The number you see, that $45 or $70 flashing in green, is not the price of silver. It is the price of a paper promise that will never be honored. If you want to know the truth, you have to look away from New York. You have to look away from London. You have to look at the bleeding wound in the global ledger that the media is refusing to show you. The price mechanism has fractured. The global market is no longer global. It has been severed in two. Ladies and gentlemen, archivist here. The data coming out of the Shanghai Gold Exchange this morning is not just an anomaly. It is a crime scene. As of 4 hours ago, the spread between the price of physical silver in Shanghai and the paper price in London hit $13 per ounce. Let me repeat that because the implications are catastrophic. $13. In a normal world, a spread of 10 cents is an arbitrage opportunity that gets closed in seconds by high-frequency trading algorithms. A spread of $13 is not an arbitrage. It is a blockade. It is evidence that the flow of metal from west to east has become a one-way street. The metal goes in. It does not come out. The arbitrage trade is dead because the inventory required to execute it does not exist. The Western financial press will tell you this is a temporary dislocation. They will tell you it is a logistics snag. They are lying to you. This is not a mistake. This is a weapon. On January 1st, 2026, the government in Beijing issued a quiet directive that changed the physics of the global economy. They reclassified silver. It is no longer a commodity. It is now a strategic dual-use material. That is the bureaucratic term for a weapon of war. It requires strict export licenses that are not being granted. This is the erection of a silver curtain. The world has been divided into two zones. Zone A is China and the BRICS bloc, where silver is physically held, highly priced, and strictly controlled for industrial dominance. Zone B is the West, where silver is a paper derivative, artificially cheap, and rapidly disappearing from the vaults. You are living in Zone B. You are looking at a screen that tells you silver is cheap. But try to buy a 1,000-ounce bar in London today for delivery. Try to get it. You will face delays. You will face premiums that erase that fake spot price instantly. The $13 gap is the tax you pay for reality. It is the cost of truth. The Shanghai price is the real price because that is where the metal is actually changing hands. The Comex price is a fiction maintained by bullion banks to prevent a panic in the bond market. Why does this matter to you? Because your entire way of life is built on silver. You think silver is jewelry. That is a 19th century mindset. Silver is the transmission of electricity. It is the trigger in the cruise missile. It is the conductor in the solar panel. It is the soul of the electric vehicle. Without silver, the Green Revolution is a museum exhibit. Without silver, the defense industry is a paper tiger. Beijing knows this. They are not hoarding silver to make coins. They are starving the West to feed their own industrial beast. They are securing the feedstock for the gigafactories in Shenzhen and the solar arrays in the Gobi Desert. They know that the geological reality of silver is brutal. It comes out of the ground at a ratio of 8-to-1 against gold. But it is consumed at a rate that defies geology. It is burned up. It is thrown into landfills in tiny fragments inside iPhones and Teslas. It is not recycled fast enough. The strategic stockpile is gone, and now the largest refiner in the world has closed the exit door. This creates a supply shock that no amount of money printing can solve. You cannot print a conductor. You cannot print an ounce of Ag-47. Look at the victims. Do not look at the banks yet. Look at the zombie companies that rely on this metal. Look at the German industrial complex. Look at Volkswagen. Look at the solar manufacturers in Europe who are operating on razor-thin margins. They bid for silver contracts in London. They get a paper slip, but when they ask for the metal to melt down for their paste, the warehouse is empty. They are facing a kinetic liquidation of their assembly lines. If they cannot get the metal, the factory stops. When the factory stops, the bonds they issued to build that factory go to zero. This is the contagion. It starts in a mine in Peru. It travels through a blockade in Shanghai. And it ends with a pension fund in Chicago blowing up because they held debt in a German solar company that cannot produce a single panel. The data from the CME group proves the insolvency. I have reviewed the warehouse reports from January 16th. The number you need to burn into your mind is 28 million. That is the amount of registered silver left in the Comex vaults. Registered means it is available for delivery. 28 million ounces. That sounds like a lot until you realize that the open interest the paper claims on that silver is over 500 million ounces. The ratio is 18 to 1. For every 18 people holding a contract that says, I own silver, there is only 1 ounce in the vault. 17 of those people are going to get a check. They are going to be settled in cash, but you cannot build a Tomahawk missile with a check. You cannot build a server farm with a wire transfer. You need the metal. The smart money has already figured this out. They are not buying SLV. They are not buying the ETF. They are standing for delivery. They are backing trucks up to the vaults in New York and demanding the physical bars. That is why the eligible category is not moving into registered. The owners of that private silver are not selling. They are holding it hostage. They know the price in Shanghai is $13 higher. Why would they sell to a banker in New York for a discount? They won't. They will wait. They will wait until the desperation is so high that the price snaps. This is not a bull market. This is a corner. The market is being cornered by physical reality. The media will call this volatility. They will blame it on speculators. They will blame it on Reddit. Do not listen to them. This is structural failure. The mechanism that allowed the West to dictate the price of commodities to the rest of the world has broken. For 50 years, London and New York set the price. And the producers in Peru, Mexico, and Chile accepted it. That arrangement is over. The producers are now looking east. If Shanghai pays a $13 premium, where do you think the silver from Mexico is going to go? Do you think a miner in Zacatecas cares about the Comex tradition? No. He cares about solvency. The metal flows to the highest bidder. The West is losing the physical flow. And all we are left with is the paper derivative. This brings us to the bag holders. Who is holding the bag? It is not the bullion banks. They are hedged. It is you. It is the retail investor holding unallocated pooled accounts. It is the person with a Gold Saver app on their phone. It is the retiree with a 401k invested in tech stocks that have no supply chain security. If you do not hold the title to the specific bar, you do not own it. You are an unsecured creditor of a bankrupt institution. When the force majeure is declared, and it will be declared, the exchange will simply change the rules. They will say, we are suspending delivery for the good of the market. They will settle your contract at the last traded price. You will get your fiat currency back right at the moment that the currency becomes worthless because it cannot buy the thing you need. The $13 spread is the warning siren. It is screaming that the dollar has lost its purchasing power in terms of strategic assets. In a normal sovereign debt crisis, the currency collapses against other currencies. In this crisis, the currency is collapsing against reality. The dollar is strong against the euro. It is strong against the yen. But it is crashing against silver. It is crashing against gold. It is crashing against copper. That is the only exchange rate that matters. The central banks are trying to hide this. That is why the Department of Justice is attacking Jerome Powell. It is a distraction. They want you focused on the political theater of an indictment while the vault runs dry. They want you arguing about interest rates while the physical collateral of the global system is drained and shipped to Shanghai. Do not be distracted by the political circus. The attack on the Fed is real, but it is a symptom, not the cause. The cause is that the United States government has lost control of the bond market, and now it is losing control of the commodity market. When you lose control of the price of the basic inputs of civilization, you are no longer a superpower. You are just a customer with a maxed out credit card. And the vendor in the East just declined the transaction. This is the state of play in January 2026. The divorce is final. The paper market and the physical market are no longer married. They are not even speaking to each other. The paper price is going to zero, or it is going to infinity. It doesn't matter, because at either price, there is no metal available. The physical price is going to be set by those who have the metal, and right now, that is not you. So what is the protocol? How do you survive a resource denial event? You have to think like a logistics manager, not a day trader. You have to secure your own supply chain. Rule number 1, clear the decks of paper promises. If you hold SLV, if you hold unallocated pool accounts, you are the bag holder. Sell them. Get out of the paper casino. The premium you pay for physical metal is not a ripoff. It is the insurance premium against the collapse of the exchange. Pay the premium, secure the asset. If you cannot hold it in your hand, you do not own it. Rule number 2, invest in the source. The companies that actually dig the metal out of the ground are the new central banks. But you must be ruthless about geography. Do not buy a miner in a jurisdiction that will nationalize the mine. Stick to North America. Look at the tickers. Pan American silver bars. They have assets in the Americas. They have the reserves. Look at Hecla, HL. These are the companies that possess the real wealth. But be warned, even they are vulnerable to labor strikes and energy costs. This is not a risk-free trade. It is a survival trade. Rule number 3, defensive positioning. You need to own the infrastructure that moves the few commodities we have left. The rails, Union Pacific, Canadian Pacific, CP. If the ships stop coming from Asia, the internal rail network becomes the lifeline of the continent. The stuff has to move. The rails own the right-of-way. They are the arteries of the domestic body. Own the arteries. Rule number 4, the personal reserve. You need to conduct a kinetic audit of your own life. Silver is money, but antibiotics are life. The supply chain for pharmaceuticals comes from the same place that is hoarding the silver. China makes the precursors for your medicine. If they cut the silver, do you think they will keep sending the penicillin? Do not be naive. Stockpile critical medications, stockpile ammunition. Not because you are going to fight a war, but because in a resource breakdown, these items become the barter currency of highest velocity. Do not melt down your pre-1982 pennies. That is illegal. The government will put you in a cage for defacing the currency, but you should sort them. You should keep them. They are copper. They are a physical option on a future where the face value is irrelevant and the melt value is the only truth. It is a legal way to hold a strategic metal reserve in your pocket. The window is closing. The spread is $13 today. Next week it could be $20. Or the exchange could simply close, limit up. Trading halted. That is how it ends. Not with a whimper, but with a suspension of trading. When the screen goes black, where will you be standing? Will you be holding a paper slip from a bankrupt bank, or will you be holding the physical reality? The insurance adjusters have left the building. The risk models are broken. The protocol is active. Go to your pantry right now, walk into your garage, look at your generator. What is the specific output rating in kilowatts? Do you have enough fuel to run it for 14 days? Do not guess. Check. Then look at your medical kit. Count the days of antibiotics you have on hand. Is it 0 if the ship stopped tomorrow? How long do you live? Tell me the specific item you are missing in the comments. Not food. Be specific. Amoxicillin, propane, nim. If you cannot name it, you are already a casualty. This is Archivist. The protocol is active.